Hi everybody, my name is Mary Redmond. I'm talking right now about the Euro-US dollar pair. So we had an interesting week this week, and I was a little surprised. Usually I don't see that much action in a particular pair before a central bank meeting, but we had a lot of other news this week. And we saw on the 4th of July, we actually saw a bounce up in what looked like it might have been a breakout of this long-term triangle pattern. And we saw a pretty big sell-off in the euro, and this week was possibly or primarily based on the downgrade of the Portuguese debt to junk status. So that really threw the markets for a tailspin and caused a lot of selling in the euro. And it appears at this point that we're in a new downward channel, which is actually pretty steep. And this isn't the type of channel that can go on in perpetuity, but I do favor the Euro-US dollar to the downside now for several important reasons. And of course we had the important ECB rate decision today, and they raised interest rates by 25 basis points as expected. But if you read the statement by Mr. Trichet in the press conference, it had a slightly different tone than the last few meetings. And while he did talk about the continuation of their monitoring of price development, and they are talking about constantly being on the alert for inflation, he did not use the word strong vigilance, and that's very important because that's his way of basically signaling the market that an interest rate hike is imminent. So by leaving out that phrase, strong vigilance, what they're signaling is that they're probably going to wait a month or two and continue to monitor what goes on in the economy as well as what goes on with the inflation indicators. And it's possible that they may not raise rates anymore this year, although most analysts think that they're going to be an additional rate hike in the fourth quarter, depending on a lot of other factors. But Mr. Trichet doesn't usually talk about the European sovereign debt issues. In fact, he kind of gets annoyed when the reporters ask him. One thing he did mention that may cause some concern among traders going forward is that they are going to be accepting the Portuguese bonds as collateral. Now, they had previously stated that they would not accept any bonds that are rated as junk in collateral, but apparently they may have changed the rules a little bit, or possibly they disagree with the rating agencies. And the fact that Moody's and Standard & Poor's or another agency might downgrade Portugal to junk, it doesn't necessarily mean that they agree with it. So there's been some contention about that this week, of course, and the ECB was certain people in the European markets were somewhat offended or taken back that Portugal was downgraded that way. But at any rate, I think once the market participants start to, really digest what Mr. Trichet said, they're likely going to be pricing in fewer interest rate hikes from the ECB, and that's going to put downward pressure on the euro. And we also have the European bank stress tests next week. So there may be some concerns that some of these banks have capital issues, that may have too much debt that is possibly not going to be able to be paid back, and so that could put additional stress on the euro. But we also have the other part of the euro-US dollar pair, which is the US dollar. And we're seeing that the US dollar is now in a pretty strong, what I would call a pretty good upward channel here. And while it might pull back a little bit more, I don't think that this channel is going to break. I think there are a number of different factors that are all contributing to the strength in the dollar that we're seeing this week and really this month. So if you look at it on a magnified chart, it does look like a pretty solid channel, and as long as it stays here, it doesn't break below these lines, I would favor going long the dollar. So what we saw in the stock market is a really good move towards risk appetite. And if you look at the Dow, for example, or the S&P, you see a really robust rally this week. And it's really not that surprising because stocks, generally speaking, will rally on the anticipation of earnings And what you generally see in the market is the first 2 weeks in January or the first 2 weeks in July and the first few weeks of the earnings season, market will generally rally. But when the earnings come out, they're going to have to, for the most part, not only meet expectations, but they generally have to beat expectations and raise their estimates going forward in order to continue rallying. Because that's just the old pattern, buy on the rumors, sell on the news. So by the time a company reports, frequently the stock price has already gone up so much that good news is already priced in. So that may be what we're seeing, and you don't want to fight the trend here again, but if you look at the volatility index, it's flashing a warning sign to the bulls. And I almost always look at the volatility index on a daily and a weekly basis. So it did show that this big spike up in the VIX that we did see a couple of weeks ago turned out to be a pretty good buy for the commodity currencies like the Australian dollar and New Zealand dollar, as well as for the stock market. So it was a little disappointing to me. I felt as if I should have bought some of the commodity currencies up here, but I was concerned about a real change in the trend. And I don't think we've seen that just yet. We may see a trend in the overall financial markets change, over a period of time over the next 3 to 6 months, as the market participants and the stock markets and the financial markets basically adjust to the lack of the very aggressive quantitative easing from the Fed. So this was the first week that we didn't have that. It didn't seem to make that much of a difference in the stock market, but we did see that the dollar is actually held up a lot better against many of its counterparts than it has in previous weeks. And if you look at the dollar against the commodity currencies, it was pretty weak today because the stock market was going way up. But if you look at it against the Japanese yen or the Swiss franc or the pound, we really saw a pretty strong dollar, even despite the fact that there was a lot of risk appetite in the market. So part of that was due to the ADP employment job growth, which was stronger than expected. So that's generally a harbinger for the U.S. non-farm payrolls. And what we've seen in the last few months, actually what we've seen over the last year is we've had some pretty good private sector job growth, but there's been very weak growth and actually layoffs in the government sector. And the states and cities have continued to lay people off. So unless the number comes in much worse than expected, I still think that this is going to be bullish for the U.S. dollar, and I think the euro-U.S. dollar is going to continue on a downward move. So I'm looking at some other chart patterns that I like to look at, and we did see in the Ichimoku, we did see this line, the 9-day line, cross over the 26-day line. Now that's a bearish move. And we also saw a bearish move in the twin RSIs, which I like to look at. And I also am looking at some of the other technical indicators for the euro-US dollar. And it's, for me, I use probably more of a fundamental type person, but you should always try to use as many fundamental and technical indicators as possible to give you the highest probability of success. And the MACD looks like it's really starting to roll over. The RSI looks like it did hit a high point and is rolling over. So all of this to me points to a downward move in the euro. And if we were to have a move towards risk aversion and an increase in fear in the market, that would probably be even more bearish for the euro-US dollar. So we're going to be continually hearing about these European debt issues for months and maybe even years to come. It's just not something that can be quickly or easily remedied, and countries are probably going to have to muddle through this for a long period of time. And so that's going to put a damper on the euro. And of course we're going to have to wait and see how the additional economic and inflationary indicators look going forward. But for the next couple of next few days, going into the weekend and going into the first part of next week, I still favor Euro US dollar to the downside. That's what I'm thinking.